All right, here we go. Here we go. All right, so let me share my screen. So first, I'm gonna share my technical analysis, my technical screen. So y'all know I got two screens. I mean three screens. Um, so I'm gonna share my technical analysis screen first, and then we're gonna go to the higher time frame, and then we'll go to the entry. So I think nope, that's not it. All right, that's it. There we go. Okay. All right, so can y'all see my technical screen?
Yes.
Okay. All right, so first let me explain what you're seeing on the charts. All right, so as you can see, I've totally winged my way off of Lux Algo. It took a while. I had to make sure I had what I needed in place um to trade the way I want to trade without Lux Algo indicators and stuff. Look, don't get me wrong, Lux Algo is great. I think they got some great indicators. And it can help a lot of people. But for what I've developed from this trading, mindset and journey, I realized that I don't need Luxalgo in order to trade efficiently anymore. Um, Again, uh, you know, great group, great indicators and stuff, but I just don't need them for what I'm doing. And then I don't need to pay the money for it either. Now I do, so I take that money is utilized elsewhere. So of course, investing in, of course, y'all know I have the pro version of the Tradingview. So at first I was double, I was doing double, paying for both Tradingview and Lux Algo. So again, just saves me a little bit of money, what have you, and being able to just utilize the one. So what I've done though, in the meantime is, so remember, so this indicator right here, and the only reason we went away from, or I went away from utilizing this one here is because I did not know how to make these order blocks smaller. All right. So two things about that. The order blocks are the size that they are based off of the actual orders that's captured within it. So basically, this 15-minute order block here is based off of this wick right here. So the order blocks are the area of the order blocks, length, however you want to call it. Like, so how thick they are. So yeah, we'll go with thickness. So how thick the order blocks are is determined by how long the trading volume in that order block is. So basically wicks and stuff. The order blocks are created based off of the wicks of those candles. So same thing here. When you look at the support level, it's based off of this wick right here. So this order block is the size and width of this wick right here. So that's what you're going to get in order blocks and the size of them. Now, so I learned that. So I realized that, and that amounts to the thickness of the order block. Or whether you do Lux Algo or this one, because I couldn't figure out for the life of me how to, make them smaller with Lux Algo, and that was distracting to me. In any case, so look, let me show you real quick. All right, so this is the volume support and resistance zones. This is the one that we used this before we started using the order blocks on Lux Algo. But what I learned is on this one, you can control and manage the size of the order blocks. So all you got to do is, let's say, so this is the 15-minute chart. So what you do is whatever time frame of order blocks that you're trying to utilize, all you have to do is go into settings, and you can do supply resistance zones, or you disable it. If you disable it, what it's going to do is it'll make it align. So check this out, right? So disable it. Watch what the order blocks look like. Oh, I think I disabled the order blocks altogether. Hold on. Let me make sure I clean that up. But all right, so let me see something. Did I disable the order blocks? Oh, okay. Yeah. All right. So we're not gonna, I'm sorry, we're not gonna disable this 15-minute order block. What we're gonna do is we're gonna make it just the support and resistance line. So if you just do support and resistance and not the zones, it makes it just a line. There we go. So it's gonna make, so you can see, all right. So this one is already small enough, so it's not gonna make it any smaller. Let me see if I can do another one. Had a bigger one here. I don't have huge order blocks on here. All of them pretty small right now. But in any case, but that's how you can manage the size of the order blocks. So like you see, I got the 1 hour. The 1 hour order blocks pretty small as is. But yeah, if you see that it's like huge order blocks, you can just turn it into something small by doing just the support and resistance instead of it being an entire zone. Because if you do the entire zone, it's gonna take the entire length of the wick, those orders in there. All right, so that's that. So you can do that like that. Now for my analysis time frame, I like to keep it at the zones, and I'll show you why here in a second. All right, so you see how this one turned back into a bigger zone because it's taking the entire zone. So this is a resistance, a previous resistance area. And you see it's based off of this wick right here. Right, so it's based off of this wick right here, so it's an entire zone. When I took it off, this was a lot smaller. So anyway, so that's how you do that. So you can make these smaller. So what I have on here for my analysis time frame, I only have the 1 hour order blocks, the 15-minute, of course, that's the chart, and then I have the 4 hour. As you can see, the 4 hour is just a line. I have that one. Same thing with the 1 hour. I think I have that one as just support and resistance. But I did want to keep the zones for the 15-minute. And like I said, I'm going to show you the significance of that here in a second. But that's how you can manipulate the size of the order blocks with this particular indicator. Only reason why I went away from it in the first place was because I didn't know how to make these thick behind order blocks smaller because it was taking up too much room on my chart. But as you can see, my chart looks a lot better. I like the colors and everything. Everything just pops and makes sense. All right, so that's that indicator that you're seeing there. So that's utilized for order blocks and for our trade setup. So that's going to be really important. All right, so then this one right here is the all right, so we've always been looking for kind of like a footprint or volume. You know, we use volume, we use the volume profiles and stuff like that. What I found, this one right here is the volume open interest footprint by Leviathan. And what I did was, you can do this a number of ways. But what I've done with this one is I take the volume, so the source for the volume, you can spread it. So you can do open interest or you can do delta. If you do open interest delta, so that's where it's bringing the source of volume. So just keep it at volume. That makes more sense. But the type, this is what I wanted to show you, really important. So this one right here, you can do total volume, which is going to give you both the total volume buy and sell orders. You can do up and down, which is going to give you the buying and selling, or you can do delta. I have mine set at delta because that just works better for me. I just need to know. I don't need to know, you know, not necessarily. I don't need to know how much volume, and I'll show you what it looks like. You know, how many buy ticks, how many sell ticks at each level. It was because really what I'm getting at is, you know, how much more volume of one or the other was there. So that's why I just go with delta. But you can, you know, depending on what you want to see, you know, you can see how many buy orders, how many sell orders, and how many buy orders are sitting right here at this price point. So you can look, you know, to see in this order block right here, you can take it, you can see right here that there's more buy orders, it looks like, than sell orders, which is what made this a support in the first place. As we can see, the support broke down. We'll talk about that here in a second as part of the setup. Really dope how we do this. And then, you know, same here. So you can see, so right here, we got more, as you can see, we got more sell volume than buy volume, which is why this is a resistance zone. Okay. Like I said, I just broke it down, make it simple for me. I just need to know, you know, which one is more, you know, who took over, you know, who's holding that zone right there for my trading setup. So that's the reason why I have it as just delta. So I know, obviously, you know, up here, so we got some trap volume, obviously up here. Or what have you. Now, the other thing to this that I want to make sure I mention is it's taking the volume based off of what you can see on the chart. So whatever price information you have, price data you have appearing on the chart, it adjusts to that. and it refreshes. So if you're using it on the 15-minute chart, it refreshes every 15 minutes. So it'll, move over, it'll refresh, recalculate, what's transpired, what volume has transpired in the last 15 minutes, and it'll update this entire line. So again, if you move your chart, it's going to calculate based off of the new volume data that's available to it. So all the volume data that's seen on the chart is what it's calculating. So if you just wanted to calculate a small portion, then let's say like right here, I just want to see from this order block on, what are we looking like? So it'll give you the volume data just for that. You'll see it, it'll adjust. So it's basing it off of this low right here and this high, basically. So you get to see all of that volume in between, basically. So you see where it kind of stops, and then like down here, we're showing 0. Again, that's just the most up-to-date stuff. So you can see in this wick right here, this is where it can become a bit significant. So as of this 10 o'clock candle, right, we know that obviously the market pushed down, but what happened was, and this is what you don't really get to see when you can't see what's going on necessarily or put it all together. So what happened was there was a lot of the market was pushed down, right, but not due to any actual selling necessarily. It could have been due to take profit, whatever was going on, but it wasn't like actual selling. It was because of the news, so it dropped. But what ended up happening was all of those sell orders that pushed it down initially got liquidated, and it got liquidated by those that control the market, pushing the market up, and or taking profit, whatever the case may be. They probably pushed the market down, had a bunch of selling going on at one time, and then because you see it all the time, but you don't see the actual what's happening at that time, right? So, and I'm gonna show you how to look at that here in a second. But what happened was they liquidated. So this was an entire liquidation of all of those sell orders or what have you, because then they came in with buy orders and then pushed the market up. And you can see where the buyers really, really took over and pushed the market back up. So again, like I said, liquidation can mean a number of different things. They pushed the market from here to here. So they probably closed all of these orders. All of that is liquidation. They liquidated what was there, right? So they got the big move and decided to go ahead and start closing those orders. That's why you see rapid movement sometimes when you see the market push down, but then you start to see it push back up. That's because smart traders, they start to close their orders and stuff, again liquidating their assets. That's all. So that's what you're seeing right there. I hope I've explained that one pretty good. But yeah, so this will give you all of that, again based off of what it sees on the chart. So anyway, so this is my view right here. This line right here just breaks up the daily sessions for me. So this is just telling me that the market opened right here, and it'll tell me when the next daily market opens right here. That indicator, in case you all are interested, it's not an indicator. I'm sorry. It's based off of the Tradingview chart itself. So all you have to do is go into settings on your chart and check the box session breaks. And all of that does is just let me know that the session started, right here yesterday and what time. So that's just for me. All right, moving on. So as you can see, I have the RSI here. This is just the regular RSI. I went in and checked the box for the divergences. Not that I need them for my trading setup. I just put them on there just to see because again, sometimes it works, sometimes it doesn't when it comes to divergence, but I don't use divergence to trade. I'm using price action and momentum. And again, we're going to get into that here in a second. As you can see, so with this RSI, I kept the settings the same. The only thing I changed within the RSI was I made the line white instead of purple. I think it was like purple or blue or something like that. But I wanted to make the RSI line white because I wanted it to pop. I need to know exactly when it's doing its crosses. But that's not the most. I'm not going to say it's not the most important part of the strategy, because it is. It's probably one of the most important parts of the trading setup. But what we're looking for and what we're utilizing this for is confluence and momentum. So obviously we're using the RSI for confluence and momentum for what we're seeing in the market, right? All right, so that's that one. And you are already familiar with the liquidation levels. And that's important as well. But I'm gonna show you something else about that liquidation that's important. As a matter of fact, I'll show you right now. All right, so with these liquidations, another important factor that I think we've never talked about is this right here. So look, so price blew through these, these liquidation levels, right? It liquidated these levels, the orders that was at these levels, right? It mitigated. So, but what happens is what we don't necessarily see is, look, price, broke through here, right? Liquidated. Even though this was liquidated, there's still, as you can kind of see right here, right? We still got some orders here. So what happened was when price came back, right? There's no other reason for price to react to this level other than this was once a high liquidity level. So you can't forget that price broke through this liquidity level. This was a high liquidity level, whether it was high buying, high selling, whatever the case may be. This had a lot of liquidity, at some point in the recent past, right? So that is why price came up to here, and I saw this coming. I said, okay, it's going to come right up to that liquidation level. If not, come back and test this support order block. But again, you keep this in mind when you see this, and that's great that the author of this particular indicator put this in here so that you could see levels that were liquidated that had high trading volume, and you get to see price actually reacting to it. So even though the liquidation isn't there anymore, and it wasn't there when this move started happening, it looked just like this. But I just wanted you all to know that these little ghost lines, oh, yeah, these little ghost lines here, they're still relevant, to price reactions.
Yeah, it was Thursday.
Okay. Y'all just how are these little dads everything or is it coming along?
All right, should be good. You still with me, Elsie?
Uh-huh.
Okay. Everything making sense so far?
Yeah.
Okay. All right, cool. All right, so with this, all right, so we got so you see how price is still reacting to this. All right, now let's get into the meat and potatoes. All right, moving averages. All right, so obviously I have two moving averages on here. I'm gonna show you the one that I use in case you all want to do the same. So I use this one right here. So it's the weighted moving average, and let me make sure I give you the exact name. All right, so moving average weighted. All right, so that is the one that I have on my charts here that I'm sharing with you all. All right, so I have two of them. So one is my 30-day, my 30 moving average, and my 200 moving average, right? And I had to correct myself because a lot of people, say 30-day moving average, 200-day moving average. All right, so that terminology is utilized. Analysts utilize that because big money traders, analysts, and everything, their analysis comes off of the daily and above. They don't do the intraday for the most part. So when they refer to the moving averages as the such and such, day moving average, it's not really a day. Basically, the moving average is, so this one right here, right? It's, it's on a 15-minute chart. It's all it's doing is it's calculating the average price for the last 200 candles. So this moving average is a result of the average price for the last 200 candles on this 15-minute time frame. All right. I wanted to make sure we understood that moving averages isn't necessarily just to the day. It's based off of how many candles. So whatever number of moving average you use, it's calculating the average price of the last number of candles, not necessarily the day, unless you're on the daily time frame. So no matter what time frame you're on, it's calculating that number of candles into the moving average, not the day or whatever. All right, so my 30-day is this one in white, and my 200 is this one here in yellow. Of course, I made my 200 moving average thicker than the white one. Now, the significance of this, and this is part of my trading setup, and this is what makes my trading setup powerful and gets can get me a longer term trade. So my 30-day moving average here is utilized mostly to tell me the momentum intraday. The 200 is the long term, the overall, what the market is doing overall for this particular time frame, right? Again, market structure, price action. Moving average is a part of the conversation when it comes to, or it should be, when it comes to price action and market structure, right? So of course we can see that price is steadily above the 200 moving average. So I know without even looking at a higher time frame that the market is still overall in the uptrend, right? Now here's the significance. So my 30-day moving average, like I said, I typically use this for my intraday trading and my intraday trade setups. So basically what I'm doing is basically trading the order blocks, nothing else. Just basically my setups are coming strictly off of the order blocks and the price action. So if the price action and the order blocks line up, then I can put in a trade. So what I'm looking for is making sure I'm trading in the direction of the market structure, unless there's a market structure shift, which is what we see going on right now. So look, here's the deal. So for intraday, we see that the price is below my 30 moving average. It's also now below my 200 moving average. So that tells me that the overall trend on the 15-minute right now is starting to shift to downtrend, right? Which means I should be looking for sell trades for USD JPY. Sell trades. If I'm looking for buy trades right now, I'm in the wrong business, because there's no reason why I should be looking for buy trades. Nothing on my chart tells me that I can get a good buy setup out of what I'm seeing right here. So my best bet for good setups right now, intraday, right, is going to be sell trade. Overall, right now on the 15-minute, sell trade. That's my best setup right now for trying to get a good trade in, right? And then my RSI, it just basically adds and verifies confluence to that fact. So how I've done my setups as of late, right, last week, and this is what I was playing around with last week, is I'm matching up my higher highs, higher low, whatever the case may be, with the order blocks, right? So I'm looking, all right, price comes up here. I want to see how price is going to react to this order block. But I'm not sold until, again, if I'm looking for a sale, I'm waiting for price to drop below my 30-day moving average. Now, it may or may not drop below the 200. That's fine. Again, for my daily, my intraday trading setups, I'm looking for it to drop below or above in order for me to get my setup. But it's going to also be based off the order block. And the best thing that happens when this happens is that the moving average lines up with an order block. You can see it right here, right? This was an order block right here earlier. And you can see the liquidity, right? So the 200 moving average lined up with everything. You see, and again, obviously price blew through it because of news, right? When it blew through it, it came back, right? So it blew through this, came back, touched my 30-day moving average. That's how I do my trade setup. So the trade setup is once it blows through or pushes above or below, I'm waiting for it to come back and test that moving average again. So for intraday, I wanted to retest this 30-day and line up with my 15-minute support here. So when it comes back and tests, so what I'm looking for is when price, it blew through it, right, comes back, I wanted to line up with this order block. I wanted to test, and it may, depending on where the liquidity is, it may go a little bit below this setup here. And then I'm going to my 1 minute time frame to look for my entries. And I'm gonna show you what that looks like on the 1 minute time frame, right? To look at the entries. Now, it didn't do that though. So we see that price, it blew through both the 30 moving average and 200 moving average, which I knew, okay, now because momentum, sentiment, and everything is pushing USD JPY to the downside. So all I need to do is wait for a pullback. So first, I look for the pullback to the 200, but I'm not looking to put an order in just yet because I know it's going to have a reaction. And again, we take out entries based off of the lower time frame, right? So again, for intraday, it pulled back to the 30. That's what I want to see. Boom, that looks really good. So now I'm interested, and now that it's at the 30, I'll go down to my lower time frame and now look to take a sell entry because it came back, it tested, it verifies that the market on the 15-minute time frame for this particular asset is now bearish, right? So I can feel comfortable in taking a sell trade in this market, right? Based off of that. And again, additional confluence. You see how we blew through, right? We got the cross right here on the RSI. RSI comes back, kind of tests it. It really doesn't, but, comes back. And this is really important. This is what I found too, y'all, is that you want price. Do not put an order in if you're trading order blocks. I don't care what you're trading. If you're trading order blocks, if you're trading moving averages, whatever it is, let price touch that moving average. Let it touch that order block. It has to touch before you put your order in. If it doesn't touch, do not put a trade in. Reason being is because your trade isn't validated by anything necessarily, right? So that you want to wait for there to be an order block, because you want to, again, trade in the direction of institutional traders. If you want to do that, then you have to be doing that based off of, the volume or the order blocks. That's why a lot of traders get manipulated against, because, again, they're not trading. And again, you see how this, pushed, past this area right here. So it grabbed this liquidity right here and then pushed down, right? But, again, it was doing that, for the manipulation of the news. But again, just something to see. This wasn't news right here. We came up, we grabbed this liquidity above here, and we pushed down. But again, I'm not looking to put in the sell trade because, again, when I look at momentum and everything, I want to see where I'm at, right? And this wasn't far enough away. Another thing to keep in mind too is I'm gonna show y'all. So for the long trade, right? I'm gonna show y'all one that I missed that I was a little pissed that I missed. Look at this. It's crazy. All right. This cross right here is very significant. Very, very significant. And you can see why by yourself. If you're lucky enough to get to catch the cross between the 30 and the 200, as you can see, sky's the limit. And here's the thing, right? The 200 moves slowly. That's your slow moving average. Your 30 is, your faster moving average, but it's not a non-moving average, right? Meaning that it's not reacting to price, so quickly, right? Which is what this moving average is right here for this RSI. But, so what happens is this, and I use the 30. I tried out the 20. I tried out the 15 and all of that. Nothing for my trading setup and the way I my psychology and all that, nothing made more sense to me than the 30. When I put the 30 on here, it just made more sense because it holds a little longer. And what I mean by that is it's not so easily manipulated and changed by price movement. So once the 30 crosses the 200, you can almost bet that it's going to go for a while. It's going to take a lot for this 30 to come back, as you can see, to this 200. And if you are lucky enough to catch that cross, right? If you do it right and you catch that cross, you can get a very, very long trade setup, using the cross with the moving averages. Just thought I'd throw that out there because I'm waiting for it to cross now. So the other thing that I wanted to point out with the moving averages is that the more space between these two moving averages, the more you should understand that price is going to continue to move in that direction. So the more space that there is between the 30 and the 200, the more that price is going to continue to move to the upside. Now, once this gap starts to close, now you're starting to see price slow down. So what that means is that of the last 30 candles, within the last 30 candles, price is starting to shift a bit, in another direction. It's slowing down. Momentum in price is slowing down to the point where it's starting to allow the 200 to catch up, right? So the last 200 candles and the last 30 candles are about to meet somewhere in the middle. And there may be, here's what may happen. You may get a bounce of the 30 off the 200. Keep this in mind too, that it could cross the 200 a little bit. You're not going to get in right when it crosses because it could be grabbing liquidity, whatever the case may be, right? It could cross or it could bounce off. Now, once it crosses and it gives a good cross, meaning we get a close, a good close candle, when it crosses and the RSI is below, all of that tells us that we're now in a real shift of the market on this particular time frame for this particular asset. And we're looking to take sell trades. And again, if we're lucky enough to catch that cross, we can ride that out for quite some time. A strategy with the moving average cross is to enter when it crosses and exit your position when it crosses the other way. Again, it could be a really, really huge trade setup for you. And this is just how it looks on this particular asset. On all assets, it doesn't look the same. But that's, I guess in a nutshell, the trading setup that I'm utilizing. But before I close out on that, let me go to the 1 minute so you all can see what this looks like on the 1 minute. All right, so keep in mind that 15-minute order block. So what I've done is I've taken the same order blocks on my technical analysis. Let me take off the moving averages. I don't use the moving averages for my entry time frame. So I'm gonna take these off so as not to confuse things. So I'm gonna block those out real quick. All right. Now everything else is taken from the 15-minute because what I'm doing is I want to see exactly what's going on inside of the order block, right? So we can see right here, we're not looking at the 1 minute. I can't take it off because it's I'm gonna have to switch to my other screen, y'all, so y'all can see what the setup looks like. It's not gonna, I don't want to have to change everything on here. All right, so let me change this back to the 15-minute and I'm gonna just transition so y'all can see exactly what I'm talking about. All right, so I want you to look at, all right, so see this 15-minute right here. We'll look at this one right here and then maybe this 1 hour. But I'm gonna have to switch screens in order to do so. Okay. All right, so this is my the 1 minute time frame. As you can see, all right, this is where I got my buy and sell. I'm using the UT bots for my buy and sell signal. So all right, so like I said, I want to get right in that order block, right? So when I'm looking to put my trade in, I'm looking to see, as you can see, my setup is to have the 15-minute order block just as it is on my entry time frame, because I want to make sure I get inside that order block and place my order while price is inside the order block. And again, you see I have my I have the footprint here so I can see what the volume looks like right now. Again, this refreshes every minute, so it gets me closer to price action and activity right now, what the volume is right now. So I can see here, we got selling, we got more selling right now at the moment than buying, but we see that the market is pushing up. So again, if we really want to see what that looks like, we can just move this back and the footprint will adjust. And as you can see, we got more buying coming into the market right now than selling at that particular price point. So that's what that looks like. So if I really want to see what the volume is looking like, I can do this right here and just get this wave right here, right? So you can see from this low to this high what the volume looks like, exactly what it looks like right now. So that's where we're getting the up volume from. All right. So and again, this becomes really significant. Again, when I get into this 15-minute support right here, which it's coming, right? I'm going to be looking to see if I get a sell signal while I'm in this order block. I want to see price grabbing liquidity again, because we know that it's below our 30 moving average. We went below our 200 moving average. Doesn't mean it's going to stay there. We don't know where price is headed. More than likely, price is headed downwards. And I kind of tell that because the moving average is pointing down as well, the 30-day anyway, the 30 moving average. So anyway, so once I get up in here, I want to see exactly how price is reacting to this order block. So once I get a sell signal inside this order block, I would take a sell trade. As long as it lines up as well with, again, as you can see down here with the RSI, we should get a cross. So as price gets closer to this order block, we should start to see the RSI line, our RSI line and the moving average line right here get closer together. Means that gap is closing, right? Which means we should see a cross around the same time we get a sell signal when we're in this order block. But again, the important piece to this is making sure you wait until price touches this order block. It can't like get right here like this one, it may get right here and then turn around because you can see we got this liquidity, this previous liquidity line here, but I'm not going to take an order unless it gets to this one right here. So you can see that there's some liquidity levels that were breached inside of here, which is when it blew through this this order block, more than likely, this support zone, and took all of that liquidity with it. So I want to see it come back inside. I'm not taking an order if it stops right here. If it stops right here and gives me a sell signal, I'm not going to take it because I want the liquidity that's inside this order block. And that's what's going to fuel my move to the downside. If it doesn't touch, oh well. Yeah, I don't care what it does, you know, if it gets here and then move or whatever. I wanted to get inside this order block before I make a move because my analysis is coming off of the 15-minute, not the 1 minute. My entry is coming off the 1 minute. So that's very important to note. And again, the other thing I'm looking for, I want a sell signal with potential cross, meaning if hopefully I can get across, but if it's close, like if they're touching, then that tells me that, you know, more than likely it's going to cross on that sell signal at some point. So that's what I'm looking for that trade setup right there. Again, I'm not looking to trade it actually, but if I was looking to trade this order block right here, that's how I would do it. All right, that's the strategy, y'all. I didn't do the analysis, the going all the way up, the top-down analysis. I think you all are more than equipped to do top-down analysis based off the setup. I think I've explained everything, you know, and how to look at it in the setups. Again, it just goes from time frame to time frame to time frame. So, and here's the important part about top-down analysis. So your higher time frame, if you're not sure where price is going, look at your next higher time frame. That can tell you where price is going. If you look at your next higher time frame, you're like, you know, when should I get out of this trade? Well, you know, a couple of ways to look at that. But again, if you know you want a good idea, you know, look at the next higher time frame, and that can give you an idea of what the overall momentum is looking like. But again, we have that with our moving averages as well. So we got the moving averages and we got the RSI to help us out with that. All right, I'm about to transition to something else. The next part of what I wanted to talk to you all about. Do y'all have any questions, any comments about anything as I transition here? Tony, Elsie?
No, I mean I missed a little bit because I was on a call real quick, impromptu call, but I will go through it again and we'll probably have to have a later conversation on flying.
Okay. Elsie, you good?
Yeah, I'm here. This was a lot of information given pretty fast, but I think I'm able to follow it because I feel like it's just building upon the foundation I already have. So I'm able to follow you. So I'm following.
Okay. All right.
I don't have any questions.
Okay, good. Yeah, I know it's a lot of information. I told you I'm trying to catch y'all up on everything I've been working on. So hopefully you can look at the video and slow it down a little bit. And of course, you know, we can always talk offline, out, you know, with you all individually. You know, if y'all have any questions and want to get in more detail about some of this stuff. But cool. All right, y'all. Look, this next part though, this is the dopest of the dope. So, all right, I'm gonna show y'all real quick. I'm gonna try to make it quick. I know we got work to do. So look, I have now learned how to not only test strategies in TradingView, but I've also learned how to create my own strategy and publish it and all of that stuff. So I'm gonna show y'all what that looks like real quick. I'm gonna do it kind of quick. So check this out, right? It's so you use the strategy tester, the Pine editor, to do this. All right, I'm gonna show y'all something really dope real quick. I'm gonna pull up another screen here. Can y'all see my screen?
Yes.
Okay. All right. I'm gonna show y'all how to write a strategy. I'm gonna show you how to create your own strategy. I'll show you how I do it anyway. You can do it the way you want. All right, so can y'all see this? Y'all see my Google?
Yeah.
Okay, all right. So this is important to my strategy, to building your own strategy. So, all right, So here it is. So I got ChatGPT, right? And y'all been hearing all the buzz about ChatGPT. It's awesome. So I'm gonna show you how to build a strategy, your own strategy. It's pretty quick. With ChatGPT, I've built a few strategies and tested them out myself, just based off some criteria that I put in the ChatGPT. So what ChatGPT does is it will write the Pine script for you. It will write the code for the strategy for you. And all you do is take that code, copy and paste it into the Pine script, into the Pine editor on TradingView, and you can test that strategy out. So check this out. Like I've been doing, I use this for like a lot of stuff. So, but so these are some strategies, that I've been working with ChatGPT, right? So I'm gonna show you. Here's one that I put in. Let's go back to this this right here. All right. So what I did was went into ChatGPT and I was like, look, let me see. Yeah, I had a whole conversation with ChatGPT. Was trying to get this right. And your verbiage has to be on point. So this is what I told ChatGPT to do. I said, write a Pine script for TradingView, and you have to word it like this, right? Write a Pine script for TradingView that is a strategy that uses 200 moving average and RSI. Include buy and sell signals when the conditions are met. I misspelled met, but okay. So look at what ChatGPT said to me. Certainly, here's a basic Pine script strategy that uses the 200 period moving average and the RSI. Boom, 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 boom. Right. So it created the Pine script for me. I'm about to show y'all how this works. Right. So look at that. So it created the Pine script. I'm gonna copy it. All right. So I'm gonna copy it. Boom. Copy. So I'm gonna show y'all how that looks. It also explains how the strategy works. Strategy explanation. Boom, 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 boom. Okay. All right. So that's that. So let me show y'all how this works. So then what you do is once you got your strategy, you go to the Pine editor. All right. So let me click new. So I'm gonna open this one and I'm gonna do new strategy. And then all I'm gonna do is paste the strategy that ChatGPT did based off of my criteria. Check that out. That's the strategy. Okay. Now what I'm gonna do is I'm gonna add it to the chart. If it's good, and I can't remember if this one had errors or not. I think it may have. I'm gonna show you what to do. So I'm gonna add it to the chart. If it's good, it'll add it to the chart and it'll automatically test the strategy out in the strategy tester. If not, it'll tell me it has errors. So let's see. Add to the chart. Okay. It looked like it had errors, and that's fine. So I'm gonna show you what to do. Yep, I remember this. All right. So let's go back to ChatGPT. Okay. So, all right. So here we go. I did that one. Okay, so let's do this. Dang, I'm gonna mess it up if I do that. All right, so let me see something. All right, so basically what I would do is you take and copy this, you copy the error line, right? Copy message, and then you go to ChatGPT and you say, I got the following errors. All right, and you paste your errors there. All you do is paste the errors. All right. And I'm gonna see if it's gonna do it, but I had a lot of conversations since then, so I don't know if it's gonna be able to follow for this particular one. But let's see. And so what ChatGPT will do is it will go back and correct the errors in the code. Okay, it's doing it. It's actually doing it. Oh, it's moving slow because I got this zoom on. Usually it's a little faster than this. All right, I'm gonna go ahead and copy it and then paste it back into the Pine script. Okay, all right, so I'm gonna delete all of this. All right, you gotta delete every single piece of that, or it's gonna come up with another error. All right, so I'm gonna paste it in here. All right, let's add it to the chart, see if we got a good strategy to test out. Boom, look at that. All right, so let's look at the results. Oh, that's right. Okay, so for this particular one, it looks like it couldn't test it for me. For whatever reason, it couldn't test this one. But in any case, I can have it, you can have it make up a strategy based off of different logic and stuff. But I think the 200 moving average, it was too specific for it. So on that particular chart, it didn't seem to, I don't think the conditions were met on this particular chart because it's testing based off of your chart. It adds the strategy to the chart, or what have you. All right, but let me show you. I'm gonna delete this off my chart here. But that's how you can create a strategy and test it. You can go into your indicators as well, and look up different strategies, and you can drop those. You can add them, and you can test them. Automatically goes to the tester, and here's the testing results. So this particular strategy that I just chose, 60% profitable. Just so you can see. And it puts out the stats. But anyway, like I said, if you want to create your own strategy, you could do it through ChatGPT, have it create your stuff. Then when you get to the on Tradingview, you can once you have a good strategy, you can publish. It's probably not going to pull up here. But yeah, if you can publish your own strategy. I don't have any scripts anymore, but you can name your strategy and then publish it as public use, or you can close it, and only people with the URL or the invite. You can make it an invite script only. You can customize your strategy however you want, and it comes equipped. All you got to do is build a strategy and put it in here. It comes equipped with a settings area where people can go in and change settings and stuff. It automatically does all of that for you. So anyway, what y'all think about that?
I think that's pretty unique.
Look, I told y'all. Look, I know I went. Look, last couple of months, man, I've just been going deep into this stuff, as y'all can see.
Yeah. I think I'm very excited